Hello and welcome to IPO Central on ET Now. My guest today on IPO Central is from Europratik Seals. It's a company which is involved in wall laminates, and the IPO is opening on September 16th, closes on 18th of September. Price between 235 to 247. It's an OFS of 451.3 crores rupees, and that gives the company a market value of little over 2500 crores at the upper end of the price band. Joining me is Mr. Pratik Singhvi and Jay Singhvi. Pratik is the chairman and managing director, and Jay is the ED and CFO. Gentlemen, thank you very much for joining us on ET Now. To begin with, Pratik, you are into the wall laminates, and it's a segment which is growing very fast and emerging. Is an emerging category in the home furnishing business. Give us a sense of your business model and how do you operate?
Firstly, good afternoon, everyone. Thank you for having us here. So we are into a very interesting space, which is decorative wall panels. We run an asset-light business model. Currently, we have appointed more than 36 contract manufacturers all across the world, and we are into this fast fashion of wall panels. So as on today, we have 30 products and 3,000 designs, which we are catering all across India. So innovation, R&D, development, that is the heart of our business. We have, in last 4 years, we have launched more than 113 catalogs. So over 1,000 designs every single year we launch for the Indian market, customized to the Indian taste, Indian designs, Indian palette. We do it over the years. We have been doing that. That's our business model.
Just to get things right, so basically you decide on the designs and everything, and the contract manufacturing happens outside the country, primarily in countries like China and other regions basically, and then you import them, and those are sold via distributors in India.
Yeah, exactly. So Korea is one of our biggest country where we are procuring our goods. In India, we have more than 180 distributors all across the country. North, west, east, south, most of the zones, most of the top cities, we have distributors. So back end, we have 36 contract manufacturers. At the front end, we have more than 180 distributors and around 9,000 to 10,000 retail touch points.
Can you give us a breakup of kind of imports that you do from Korea and other countries like China?
So Korea would be around 35-40%. China would be another 35-40%, and balance is a little bit from Vietnam, US, Europe, and also we are around 8 to 9% from India as well.
Give us a sense of this market. It's an emerging market, and it's now picking up in India. How big is this market? When you say that you are importing or you're doing contract manufacturing for them, what is the kind of relationship that you have with them?
So this market is like really growing. It's a new age market. It's a sunshine sector where people are replacing the natural products like a real wood or a real marble and replacing with our wall panels. So we take care of the pain points of the natural products. Our products are borer, termite, water resistant. Also, it is very, very easy to install, time saving, cost saving. It's a new age product, and the trend is there in India, and everyone is loving it, and it's growing by the day. So as per the reports, current market size is around 1,800 crores, and we hold around 16% of the decorative wall panel market.
Jay, come in here. You are working on a margins of nearly 36% for FY25. Are these margins are normal margins for you, or there is a chance that you can increase these margins? And assuming that if you are able to shift some of the production in India, is there a possibility that this production can be shifted to India as well?
So our margins would be staying in and around the same range, around 35 to 40%, because we are more into fast fashion. We keep innovating new designs. Because of that, we can charge a higher margin and higher premium margin for that. And regarding shifting the production to India, most of the products, the raw materials and everything are available maybe in Korea or China. So it does not make as much advantage for us to move into India. But in future, if there is an option, we are open to that.
So to get things right, you are distributing it through a lot of distributors in India. What are the kind of reach that you have in India, and how many warehouses that you have in India through which you are distributing across the country?
So we have currently 113 cities our products are available. 180 distributors are working for us. Most of the top distributors have been with us for several years. My personal experience into wall panel market is more than 2 decades. So we understand this market. We understand the fast fashion, what the customer requires, and that is the model that we operate with.
I just wanted to check with you your financials once more, Jay. In FY25, you had a top line of 284 crores and a PAT of 76 crores. I saw in your RHP that there was a fire in one of your warehouses in Mumbai or Bhiwandi, which led to losses of over 30 odd crores. What is the kind of impact that you could see of that in your financials in FY26?
So in FY26, because of the fire, we have major 2 impacts from that. One is the GST credit what we had taken on the import that we need to pay to the government. That would be around 6.5 crores. Plus there was a 5% deductible on the insurance policy. So that would become to another 1.5 crores. Also we had a business loss for 2 months from May, June. That also impacted us a little bit. But from July onwards, we are back on track. Our sales are growing again, and we are confident that for this year we will end higher than what we have done in the last year.
Okay. I would like to add here. I would like to add here something.
Yes.
Yeah. So our business model was very well tested, and you can see even after the fire, within 2 months, we are again on the growth trajectory. And in spite of the loss what Jay had mentioned, we still showed a positive PAT in the first quarter.
Okay. Any reason why your top line fell in FY24? Because in FY23 it was 263 crores and in FY24 it was 221 crores?
So yeah, the main reason was at that time the management, we decided that let us focus on the high margin products. So as we said, we are into designing, bringing new products into India. So for that period, we thought of let us focus on the high margin products. So you can see, although the top line has gone down, but the bottom line has still grown. So that was the strategy during that year.
Jay, come in here. Your operating cash flows are negative for FY25. What are the reasons for that? Because you are in a trading business. So is there a high receivable that is there in your books?
Yes. No, because in FY25 we had some of our consolidation happen. Few of our companies we had taken over. Because of that, the treasury funds and everything we had to give to the companies which we have taken over. Because of that, the cash flow is shown negative. But from next year, it would be again be positive.
Jay or Pratik, anyone can answer this question. Your OFS of 451.3 crores. Now, this money doesn't come to the company because it's an OFS. But what is the primary reason for this OFS for you? And since you yourself said that there is a lot of growth in this business, why hasn't the company raised money for growth?
So as I said, we run an asset-light business model. So from the internal accruals, company can grow easily. We are going for the listing mainly for more visibility for the sector, more visibility for the company, and being the first mover here, we foresee a good demand. and that is one of the main reasons for going public. Why OFS? Because in spite, like, we have been growing on a regular basis. To fund our growth, to fuel our growth, we have the internal accruals to do that.
Can you also give a little more clarity on the receivables part, because it has gone up to roughly around 95.8 crores in FY25. How does this business work from a receivables point of view? What kind of credit period that you give to your distributors, and when you are buying it from your contract manufacturers, what is the credit period that you receive from them?
So, as Jay said, we consolidated all our business in last year before deciding to go public. So that is the reason the receivables have gone high. All our major suppliers, they give us a credit of the top suppliers give us 60 to 120 days. But being a cash-rich company, we take the qualitative advantages from that, and that's why you don't see much credit which we are using from our contract manufacturers. In terms of the receivables, as you can see, over the last 7 years, there has hardly been almost zero bad debts for the company, because most of our customers have been loyal with us. We have been working with them for quite a long time. So we do support them. We handhold all our distributors. So we give a little bit of extended credit to them.
Is consolidation the only reason why your inventories have also gone up and your working capital has also gone up?
Exactly.
One
yes.
of the reasons, major reason is of the consolidation.
So now that the consolidation is over for you, how much is it supposed to come down by?
Yeah. So working capital, we are targeting around 120 to 140 days from 170 days for the next FY26.
And inventory days?
Inventory days would be the same what we have, like 90 days, because inventories are the main asset for us. It's the main working capital, as we don't have any factory. So we generally have to keep a good amount of inventory to fulfill the customer demands.
Also, Jay, if you can give us a sense of the kind of growth that you're seeing with respect to because it is a home decorating segment which is there. How are you seeing newly built houses using them, or it's a repeat kind of thing where existing households are now moving towards home decor in form of wall laminates and others?
So it's like the real estate market is growing, as well as the wall panel market is growing, like around 17 to 18% as per the Technopat report. So we think that the requirement would be for both, for refurbishing of the house as well. If you need to just have a new wall in your house, you can use our product which can be installed in like 2-3 days, 4 days, as well as a lot of new construction is going on. So we see a good future and good growth in this market.
Pratik, can you give us also a clarity on your relationship with one of the group companies or associates, Pratik Panels? You have now disassociated yourselves from them. That's my understanding. But what is the kind of relationship that you have with that company, because that's a listed company as well?
Yeah, so there were no operations since last almost 15 years in that company, and I think in the year 2021 we sold that company, and so currently we are not associated with them.
Okay. My final question to you is with respect to the kind of cash that you have in your books. What is the cash generation that you normally see from operations? Because last year was a negative cash operation because of consolidation. But in a new normal course of business, what is the kind of cash generation that you normally see in this business?
So as per the current run rate that we are going, we see somewhere between 7 to 9 crores post-tax, which we will generate every single month on an average, and we will continue to grow from there.
Pratik and Jay, it was a pleasure talking to you today on ET Now, and thank you for coming on IPO Central. Your IPO is opening on September 16th, closes on 18th, price between 235 to 247, and it's an OFS for 451.3 crores. Thank you for joining us today.
Thank you.
Thank you very much.
Thank you so much.